Morning. We'll start with which accounts? Partnership accounts. Before we start and go ahead with partnership accounts, let us understand the basics of partnership and let us proceed with it. Whether partnership law is over for you, whether partnership act is over for you. Started, basic started, okay, that is sufficient. Because knowledge of partnership law is required, but even if it is not there, no issues. I'll go through the basics. What is a partnership? Agreement between or agreement amongst, that's the better word to use, two or more people to carry on what? A business or profession, who share the profits and losses arising therefrom. Okay, we look at agreement amongst two or more people to carry on which one? A business or profession, who share the profits and losses arising therefrom. That is the basic definition of which one? Partnership. Here, two or more people join together for doing a business. They share the profit and losses arising therefrom. If you look at the words, profits as well as what? Losses they should share. So you can say they are unlimited liable, jointly and what? Severally liable. That is the basic definition of which one? Partnership. So partnership is an agreement. In Contract Act, you would have learned whether agreements are enforceable by law, whether all the agreements are enforceable by law. No. Okay. An agreement will become a partnership deed. An agreement will become a partnership deed when it is registered. So what is a partnership deed? A registered agreement amongst partners. So without registration, if you sign the agreement and keep it, that is called as what? Agreement. When you sign the agreement and register it, that is called as which one? Partnership deed. So what is a partnership deed? A registered agreement amongst what? Partners. Suppose if you just sign the agreement and keep it in your drawer, you don't register it, what will happen? You cannot get to the court of law if there is a dispute. Between partners, if there is a dispute, can you solve it? No, court will not consider agreement. Only when it is registered, it is called as which one? A partnership deed. That is called as which one? A registered agreement. Only when it is legally enforceable. Then, what partnership deed will contain? What are the main contents of partnership? I'm not going for a legal meaning or legal contents. With respect to preparation of accounts, what are the main contents? What should be there as contents of partnership deed? With respect to preparation of accounts, what should be there? There are so many matters like name of the name of the firm, type of the business, name of the partners, address of the firm, okay, purpose for which the money can be invested, who's a working partner, all those things will be there. They are for legal purpose. With respect to accounts, what should be the content? Because we are preparing accounts earlier. So first one is which one? There should be a profit sharing ratio. There should be a profit sharing ratio. Number two, there should be interest on capital. Number three, what is the interest on drawings? Then, number four, don't copy this, I'll give you time to copy. Interest on loan from partner. Then, some partner will take care of business, we call them as working partners. What is the salary or commission payable to working partner? Commission, you can call this as remuneration to partners. Okay, these are the main contents with respect to preparation of accounts. With respect to what? Preparation of accounts. Partnership deed lender, profit sharing ratio, interest on capital, interest on drawings, interest on loan from the partner, salary or what? Commission to the partner will be there. Okay, let's assume if partnership deed is silent. What do you mean by partnership deed is silent? The partnership deed, It is not mentioned about all these things. Partnership deed is silent about. Okay, in the partnership deed, they have not mentioned what is a profit sharing ratio, what is interest on capital, what is interest on drawings, what is interest on loan from the partner, what is the salary or commission payable to the partner. எதுவே மென்ஷன் பண்ணாம ரெஜிஸ்டர் பண்ணிட்டாங்க. What will happen? Profit sharing ratio, let us assume ABC contributed 30 lakhs, 40 lakhs, 30 lakhs. Capital. What is the capital? 30 lakhs, 40 lakhs, 30 lakhs. Partnership deal profit sharing ratio எதுவுமே சொல்ல. What will happen now? Will it be shared in capital ratio? Will it be shared in capital ratio? No. The law says equal ratio. Okay, don't take which ratio? Capital ratio. Take which ratio? Equal ratio. Then, second, what about interest on capital? No interest will be paid. No interest on capital will be paid. No interest on shall be charged. Interest on drawings charge பண்ண முடியாது. Interest on loan alone will be paid at rate of what? 6% per annum. Salary or commission or remuneration to partners not payable, not eligible or not payable. Once again, if the partnership deed is silent about all these matters, what will happen? The partnership deed is silent about all these matters, what will happen? Profit or loss will be shared equally. Interest on capital, no interest will be paid. Interest on drawings, no interest shall be charged on drawings. Interest on loan alone will be paid at rate of what? 6% per annum. Salary or commission to partners is not payable. Homework, pay attention, pay attention. So, listen. If in the examination question, if they don't give you profit sharing ratio, what matters? Equal ratio. They have given loan from partners, but they have not specified interest. Then it will be shared what? 6% per annum. Interest on loan alone will come at the rate of what? 6% per annum. Salary or commission remuneration to partners are not payable. Now, please note this. Please note it fast, then we'll continue. Take it up fast, then we'll proceed. So profit sharing ratios equal, no interest will be paid, interest on drawings cannot be charged, interest on loan alone what? 6% per annum. No salary or commission is payable if the partnership deed is silent. Okay, partnership deed la mention pannalena, all these things are applicable. Next, are getting final accounts. Final accounts of partnership includes a trading P&L account, a trading profit and loss account. This is like any other concern. This is like any other concern. That is the first one they prepare. You can take it along with me. Final accounts include, what is the first part? Trading P&L account. The second part is profit and loss appropriation account. Look at the word. P&L appropriation. What do you mean by appropriation? Sharing the profit. Earn the profit, share the profit. So P&L appropriation account is to show how the profit is shared or distributed amongst partners. All partner related items will come in the P&L appropriation account. All other expenses will come in which account? Trading P&L account, like purchases, sales, salary, rent and all will come in which account? Trading P&L account. The P&L appropriation account, you will have what? Only partner related items. Only partner related items. And of course, they prepare a balance sheet. So compared to sole trader or single ownership, in partnership, they prepare one extra account. What is extra account? Sharing of profits. Sharing of profits is done through which account? P&L appropriation account. Now in the examination or in your syllabus, preparation of trading P&L account for a partnership is not covered. Preparation of balance sheet is also not covered. What is specific to partnership? How to prepare which one? P&L appropriation account is covered. Start. Adagedi. Preparation of profit and loss appropriation account. Take it up along with me. We'll bring the net profit. Net profit from which account? Profit and loss account, we'll take it here. All partner related items will come. Only partner related items will come in which account? P&L appropriation account. By interest on drawings. When partners withdraw money, okay, that is called as drawings. Interest can be charged on drawings if the partnership deed is giving that information. Okay, interest on drawings shall be charged. If the partnership deed allows, you can charge which one? Interest on drawings. Likewise, you have to pay interest on loan. Interest on loan from partner will be paid. To interest on capital. Interest on partner's capital will be paid. To salary or commission to partner. Partnership firms also maintain reserves. If there is a transfer done to the reserve, that is done. Then balance profit. Balance profit is shared by partners. After doing all these things, whatever is the balance profit will be shared by what? Partners. So this is which account? P&L appropriation account. Look at the word. Appropriation means sharing of profit, distribution of profit. So net profit, you take it from P&L account. Take the interest on drawings. Interest on drawings, why it is credited? It is an income for the firm. It is an income for the firm. Interest on loan from partner. Interest on partner's capital. Salary or commission to partner. Transfer to reserves. Balance profit is shared by partners in the agreed ratio. Now, what about salary to employees? Where it will come? Salary to employees, that will come in which account? The trading P&L account. P&L account will work. What about interest on loan from bank? Loan taken from bank, where it will come? Interest. It will come in which account? P&L account. Here only interest on loan from what? Partner will come. Interest on partner's capital only will come. Then what about interest on loan taken from partner's wife or husband? Partner or wife or husband loan kuduthirukanga, where that will come? Interest we are paying. P&L account. If the loan is given by the partner, for that if we pay interest, that will come in which account? P&L appropriation account. So only partner related items will come in which account? P&L appropriation account. Take it. So once again, if the partnership deed is silent, what will happen? No interest will be paid on drawings or capital, no interest can be charged, then no salary or commission, profit or loss will be shared equally. Interest or loan alone will be what? 6% per annum. But if the partnership deed contains, then you can pay all these things. You can pay what? All these things as per the agreement. Then, pay attention. This is the most important one to learn. Listen, let us assume there are three partners. Okay. A contributed 50 lakhs of capital. B contributed 30 lakhs of capital. Contributed means while joining the firm or when required, they contributed a capital. How much? 50 lakhs, 30 lakhs and what? 20 lakhs. Will it be altered every year? Will it be kept permanent? Will it be altered every year or will it be kept permanent? What do you mean by altered every year? Interest on loan will be added here. Interest on capital will be added here. Salary or commission to the partner will be added here, like that. You will alter it or keep this permanent. Depends on accounting policy followed by you. Depending on accounting policy followed by you, there are two types of capital. One is called as fixed capital method. Which method? Fixed capital method. Wait. Under this fixed capital method, we will be maintaining two accounts. One is called as capital account. One is called as which account? This will be permanent. You will not alter it. All your current year workings will go to an account called as current account. It is not bank account. Partners capital only. Permanent capital will be kept in which account? Capital account. All this interest on loan, interest on capital, salary, then profit share, interest on drawings, etc. will be recorded in which account? Current account. That is which method? Fixed capital method. Second is called as fluctuating capital method. Don't copy this. Wait, I'll give you time to copy. Simple. All adjustments are done through capital account. All adjustments are recorded through or done through which account? Capital account itself. No need of maintaining current account. Clear? This here, all will be there. Or what do you mean by all will be there? Interest, drawing, salary, commission, everything will be recorded through which account? Capital account itself. Very simple, sir. This capital account is like a permanent account. What do you mean by permanent account? 50 lakhs, 30 lakhs, 20 lakhs. That will be there permanently. What about the interest charged on drawings, interest on capital, interest on loan and all? That will be taken to which account? Current account. If you are following fluctuating capital method, then everything, capital or current year working, everything will be done through which account? Which account? That capital account. Everything is done through capital account. Okay, I said no need to copy this. I'll give you time to copy, pay attention. Now, there are two accounts we are maintaining when there are which method? Fixed capital method. What are the two methods? Two accounts. One is which account? Capital account. Second one is which account? Current account. Two accounts we are maintaining. Capital will have which balance? Credit balance or debit balance? Accountingly, we follow the rule credit the giver. Credit the giver. So when a person gives money, it will have which balance? Credit balance. So it will be like by balance brought down. By balance brought down. This is like opening balance. Now, whether the capital will change under fixed capital method, whether the capital will change, it will not change every year. It will rarely happen. For example, you want to expand the business. At the time, what you will do? You will ask the partner to bring in money. You will ask the partner to bring in money by cash or bank, credit the giver. When there is an additional capital. Only when additional capital is introduced for expanding the business, which should be permanent, that will be recorded in which account? Capital account. Likewise, when the partner withdraws capital, it is not drawings, okay? It is capital withdrawn. For example, ABCR partners, 50 lakhs, 30 lakhs, 20 lakhs. Now A says, my sister also would like to come to partnership. My sister also would like to come to partnership. So pay me 50% of my capital. Pay me 50% of my capital. I will give it to my sister. She will become a partner. So at the time, what happens? She withdraws what? Capital. That capital, if the capital amount is taken back, that will be recorded in which account? Capital account. Then it will be to balance carried out. But will it happen regularly or rarely? Rarely. It will happen rarely. This bringing in additional capital or withdrawing capital will not happen every year. That will happen very, very rare. Okay. Next, which account? Current account. Current account will have a normal credit balance. By balance brought down. It will be the normal balance. Then it can have a debit balance also. When it is overdrawn. For example, her profit share is, let us assume 5 lakhs. What is her profit share? 5 lakhs. She withdrew during the year 5 lakh 50,000. Her profit share is only 5 lakhs, but she has taken 5 lakh 50,000. Now it will have which balance? Overdrawn balance. When the overdrawn balance is there, it will appear in which side? Debit side. Then all your current year workings will come in the current account. What do you mean by current year workings? Interest on loan, interest on capital, salary, all partner related items will come in which account? Current account. All will come in which account? Current account. So what will be recorded? By salary or commission to the partner. By salary or which one? Commission to the partner. By interest on capital. By interest on loan. By profit share. Share of profit will be credited. Debit side to drawings. Drawings means regular drawings. Interest on money withdrawn by the partner. Then to share of loss. Share of loss will be recorded. Then you will work out to balance carried down. To balance carried down. Suppose if it is an abnormal balance, it will come as by balance carried down. If it is overdrawn, it will appear in the opposite side. Okay. So under fixed capital method, we maintain which account? Capital account, which is kept permanent normally. All your year to year workings, like salary or commission, interest on capital, interest on loan, profit share, everything are recorded through which account? Current account. Whenever the money is withdrawn by the partner, it is recorded in which account? Current account. Under fluctuating capital, all adjustments are recorded through which account? Capital account. Suppose if the partnership firm maintains under fluctuating capital method, அப்படியே remove பண்ணிடலாம். In the capital account itself, what will be recorded? Opening balance, salary, interest, interest on loan, profit share, drawings, interest on drawings, share of loss, then to balance what? Carry down like that, it will be recorded. So if it is a fluctuating capital method, in the capital account itself, all current and capital account adjustments are made. Okay, so now take up this. Don't take much of time in copying. Please copy it fast. Now, share the working share. I'll share the workings in the group. Copy this first. But better to copy this. Hmm. If there's a net loss, it will be having a credit over. Share of profit will be share of loss now by share of loss. These are the distinguishing features of partnership with respect to preparation of accounts. All other things, whatever you learn in partnership law is applicable here. Like different types of partners, rights and duties of partners. Okay, what are the liabilities of partners? Okay, all those things are just as Partnership Act. Nothing new, nothing different. Same as Partnership Act. Whether partners are liable to limited extent or unlimited extent. Unlimited extent. What do you mean by unlimited extent? I told you. Unlimited liability. Jointly and severally liable. Let us assume 50 lakhs, 30 lakhs, 20 lakhs capital. What is the total capital? 1 crore. For the past 4 years, they run the business. It is a profit. Very good. If it is a loss, 4 years loss came to 110 crores. What is the capital invested? 1 crore. What is the loss? 110 lakhs. 110 lakhs. More than the capital, 10 lakhs extra loss. Now you have to pay the liabilities. You have to pay the liabilities. Who should bring money for paying liabilities? All the partners should bring in pay and pay the liability. Let's assume two partners became insolvent. அவங்களால பைசா pay பண்ண முடியல. They don't have a private asset to bring and pay. Only one partner is having a house. Two partners, they don't have house, don't know property, they are not able to pay the money. Only one is left out. What will happen? That partner should sell the personal assets and bring the money to the business. Sir, மூணு பேர் சேர்ந்தாலும் business பண்ணோம். பிசினஸ் லாஸ் ஆயிடுச்சு. ஓகே, ரெண்டு பேர்த்துக்கிட்ட ப்ராப்பர்ட்டி எதுவுமே இல்லை, நான் ஒருத்தன் தான் லெஃப்ட் அவுட், எனக்கு ஒரே ஒரு வீடு தான் இருக்கு, 10 லட்சம் ரூபாய் டியூ இருக்கு பார்ட்னர்ஷிப்னா, வாட் ஷுட் ஐ டூ? ஐ ஷுட் செல் மை ஹவுஸ், பிரிங் த மணி அண்ட் பே வாட்? The debts of the firm. That's why jointly and what? Severally liable. Partnership will be good as long as you earn profit. If you suffer a loss, if others escape, the person who's having the property will be get caught. That's why there's a limitation of this particular partnership is there in running the business. But that will happen only when it is a negative thing. When it is a positive scenario, that is not an issue. Okay, so we learned about two things. What are the two things we learned? How to prepare P&L appropriation account and how to prepare which one? Partners, capital and current account. Based on that, we'll do a question. And I will ask you to do a question after this. This weak able lazy problem, that is from your textbook. We'll do that later. Now, this problem, take it up. Prepare P&L appropriation account, capital account, and current account of partners. So when they use the word current account, that means they are maintaining under which method? Fixed capital method or fluctuating capital method? Fixed capital method. Take up this question. Particulars and 3 columns. Particulars A, B, C. Take up this. This is one of the most repeated questions for about 10 marks in the exam. In the first chapter, basics, they asked a question. Okay, that will be in this model. In the same model, after this class, what you have to do is in your ICA material, you can find practical question number 1. Weak, able, lazy, like that, a problem will be there. Capital will be there, current account will be there, then what? Drawings will be there, similar adjustments would have been given. Like life insurance premium wrongly charged, repairs was wrongly charged, like that it would have been given. Prepare P&L appropriation account and which one? Current account of the partners, like that, they would have been a question. I request you to try that at home. First, we'll do it in the class. That question for you to try it at home. In the basics chapter, they ask a question, it will be this model question. Have we taken up? First, we have to prepare which account? P&L appropriation account for the ending what? 31st March 2023 we have to prepare. Wait. Can we take this net profit as it is? What is the net profit for the year? 6,90,000. Can you take it as by net profit? Net profit, can you take 6,90,000? No, there are errors. There are errors we have to rectify. No need of accounting knowledge to rectify errors. If you understand what happened, what went wrong, then you will be able to rectify the error. Wait. It was found that closing stock is overvalued by 10,000. It was found that closing stock is overvalued by 10,000. What do you mean by overvalued? We put extra value. We have put extra value. Opening stock where will appear? Trading account lingo. Debit side or credit side? Debit side opening stock will come. Debit side opening stock, purchases, expenses will come. Credit side what will come? Sales and closing stock will come. Sales and closing stock will come. Credit side, when you put more amount, what will happen? Credit side, when you put more amount, what will happen? Credit side, அதிகமா போட்டா என்ன ஆகும்? Profit. Profit அதிகமாகும். Gross profit அதிகமான automatically net profit will be more. Gross profit is more, automatically net profit will be more. Once again, I repeat. Where closing stock is recorded? Where closing stock is recorded? Credit side of your trading account. Credit side அதிகமா போட்டா profit will be more. Is it correct or error? How to rectify this? Less பண்ணிக்கணும். So net profit போடும்போது we'll take 6,90,000 minus what is the stock over value? 10,000. What about the next one? Personal life insurance premium 20,000 debited in trade expenses. Partner order personal life insurance premium trade expenses debit பண்ணி வச்சிருக்காங்க. Personal expense should be taken as drawings. Personal expense should be taken as drawings. But they wrongly charged in which one? Trade expenses. Because of that, what would have happened to profit? உங்களோட personal expense businessல charge பண்ணேன்னா profit will come down. Profit will come down. You're wrongly charging your personal expense in business. Because of that, profit would be low. How to rectify the error? Add back how much? 20,000. Okay. 6,90,000 is the net profit. Minus 10,000, that is overvaluation of closing stock. Plus 20,000, rectification of personal expense charged in business. How much totally? 7 lakhs will come. So this is net profit after rectification of error. You can find the question that we are going to solve. Net profit 60,000 before interest on capital. Life insurance premium paid on 30th June has been charged to which account? Miscellaneous expenditure account. Repairs 10,000 has been debited to what? Plant account, like that. Traveling expenses of a partner for a pleasure trip to UK was debited to which account? Travel expense account, like that. They would have given. You would rectify the error and take it. You would rectify the error and take it. Okay. Then net profit we worked out. Then what else will come in the P&L appropriation? What else will come in the P&L appropriation account? By interest on drawings will come. Interest on drawings will come. Then what will come in the debit side? interest on loan will come. Then to interest on capital will come. Then what will come? Salary to partner. Then commission to partner if there is any. Then transfer to reserves if there is any. Then balance profit will be shared. Balance profit will be shared by partners. This is how we prepare which account? P&L appropriation account. Pay attention. Now, what is the interest on drawings given in the question? Drawings 18% per annum interest will be charged. Look at the drawings given. 50,000, 80,000, 20,000. 50,000, 80,000, 20,000. Wait. In that, one more drawing is there. Personal life insurance premium of C, how much? 20,000 debited to trade expenses. Wait. Already how much of drawing recorded? Already C or a drawing part. Plus one more drawing. Personal expense. So what is the total drawings of C? 20 plus 20, it will be 40,000. Now we have to charge interest on A's drawings, B's drawings and C's drawings. What is A's drawings given in the table? 50,000. B's drawings? How much? 80,000. Huh? C order drawings? 20 plus 20. 20 plus 20, how much? 40,000 into, what is the interest? 18%. Think. 50,000 into 18%. They stop it. Wait. Look at the words used. Whether the money is taken at the beginning of the year. Sir, 50,000 you withdraw at the beginning of the year. No, okay, 18% per annum. Okay. Pay attention. Let's assume she is partner A. She withdrew 50,000 at the beginning of the year. Now 50,000 into 18%, 1 year, okay. But it is given drawings during 22-23. It is not at the beginning of the year, not at the end of the year, it is throughout the year. In the absence of information, if the drawings are made throughout the year on an average basis, average class, we apply which one? Average class, average due date concept, how many months? 6 months interest will be charged. Once again, I repeat. Drawings on the day 1 la panirkana? No. Is it at the end of the year? No. It is throughout the year. So on an average basis, how many months interest will charge? 50,000 into eவ்வளவு percentage? 18% for how many months? 6 by 12. $4,500. Thus also 80,000 into 18% for 6 months. For 6 months, how much it is? 7,200. Then 3,600. Then interest on loan taken from which partner? B. Eவ்வளவு amount? 5 lakhs into how much percentage? 9%. It is not during the year. 5 lakhs into 9%. How much it will be? 45,000. Then we'll charge interest on capital. We have got 3 partners. Who are the partners? A oda capital paranga evlo irukku? 5 lakhs. First line item. Into evlo percent interest? 12%. B oda capital paranga? First line 6 lakhs into evlo percentage? 12%. For C oda capital? 5 lakhs, 6 lakhs, 9 lakhs. Then. So 5 lakhs, 6 lakhs, C order capital, 9 lakhs into 12%. Don't put 6 by 12. It is capital at the beginning of the year. Interest will be given for the whole year. 5 lakh into 12%, 60,000. 6 lakhs into 12%, 7 lakh 20,000. 9 lakhs into 12%, 1 lakh 8,000. 1 lakh 8,000. Salary, which partner? Salary to which partner given? C. How much per month? C. 10,000 per month. Then 10,000 into 12. It is given only to C. 10,000 into 12, how much? 1,20,000. Then commission is payable to whom? Commission to A after 5% of net profit after all. So how to work out commission? Net profit plus this interest minus this interest. Will you deduct salary? Look at the words used. Is it commission 5% on net profit? Suppose if they say 5% on net profit, enna padirpinga? 7 lakhs into 5%. Here what is the word here they use? 5% of net profit after all interest means include the interest on drawings, interest on loan, interest on capital. Will you deduct salary? No. Suppose in the question if they tell you 5% of net profit after all interest and salary. அப்ப என்ன பண்ணிருப்பீங்க? Net profit plus interest minus all interest and which one? Salary also you would have deducted. But here for calculating commission, I will take 7 lakhs. 7 lakhs plus this interest on drawings I will take minus what? All interest. Only up to this level you will deduct. Don't deduct salary. So you will get 4,30,300 into எவ்வளோ percentage pay பண்ணணும்? 5%. This into 5%. Then any transfer to reserve given in the question? Any transfer to reserve given in the question? No. Balance of profit will be shared by the partners. Who are the partners? A, B, C. Balance profit. You tally this, you'll get the balance of profit. Total of credits minus total of debits. You get the balance of profit. This will be shared in which ratio? Profit sharing ratio. If profit sharing ratio is not given, then you would have gone for what? Equal ratio. What is the profit sharing ratio given in the question? 5:3:2. So simple. How much? 288,785 into 5/10. Next one. 288,785 into 3/10. Next one. 288 into 2/10. So this is the ratio in which they share the profit. Once again, I repeat, pay attention. Net profit 6,90,000 given. Why minus 10,000? Stock overvalued. When closing stock is overvalued, it will increase the profit. How to rectify the error? Minus it. When personal expenses are charged in business, it will reduce the profit, add back. You get the rectified profit. By interest on drawings, why are you applying 6/12? Why are you applying 6/12? Because it is not at the beginning of the year, not at the end of the year. On an average basis, we do it. Then, interest on loan from B, interest on capital of A, B, C, salary to C, all are charged. Then, commission is profit plus interest minus all interest only into 5%. Balance of profit is shared amongst partners in which ratio? 5:3:2 ratio. Take up this. Then we have to prepare which account? Whether we have to prepare capital account, whether capital changed. The question like capital level. What is the capital? 5 lakh, 6 lakhs, 9 lakhs. Whether any partner brought in money, taken away money? No. So no need to prepare capital account. We have to prepare which account? Current account. We'll do a current account. First take up this. This is one of the most repeated question in the exam, where you are asked to prepare P&L appropriation account and which one? Current account of partners. Capital account, no need. Opening balance will be the same as closing balance. Our closing balance will be equal to opening balance. Done? Now start current account. யாருக்கு credit balance இருக்கு? For whom it's a normal balance? A and B, how much? 20,000? 20? 25,000 by balance brought down. Who's having overdrawn balance? C, how much? So overdrawn balance will come in the debit side. Then record all the other things which are there in P&L appropriation account. Before that, by drawings given in the statement, what is the drawings given in the statement? A, first line to second line of the problem. Drawings பாருங்க. Drawings எவ்வளவு கொடுத்திருக்கா? 50,000 for A, 80,000 for B, for C, 20 plus 20, 40,000. Don't forget that. Already how much has been given? 20,000 plus on the life insurance premium charged in trade expenses. 50,000, 80,000, 40,000. Is it correct? No, drawings will be reduced from capital. 2 drawings. Then, to interest on drawings. Interest on drawings. How much interest on drawings we provided? This 4,500. 7,200 and 3,600. Then, by interest on loan. What is interest on loan? To which partner? Interest on loan. Look at this. Interest on loan was given to B. All partner related item will come. Then, by interest on capital. By interest on capital. What is interest on capital ABC? 60,000, 72,000, 1,08,000, 1,08,000. Then, by salary. Salary is paid to whom? See, how much? 1,20,000. Then, by commission. Commission is paid to which partner? A. Commission we worked out. 21,515. By profit or P&L appropriation, the profit share. This one. Then that's all. Tally this, you'll get 2 balance credit now. Done? Now, 1 minute, pay attention. This will be there in the display. Pay attention. Now, what I request is, at home, I request you to try practical question number 1, and practical question number 1 is sufficient. Practical question number 1 is sufficient. Okay, that is the model in which they test. I hope which solution it is available. They would have done by the same method. Net profit after adjusting this one by interest on drawings to which one? Interest on capital. There is no salary, there is no commission, nothing. Then the balance would have been shared amongst what? Partners. And they would have prepared interest on drawings workings, okay, 8% per annum for 6 months on the money. Then they would have prepared partners which account? Current account. You can find two partners will have a credit balance, one partner will have which balance? Debit balance. They would have recorded all these things. Interest on capital, share of profit, drawings, okay, then interest on drawings, then closing balance they would have worked out. Try this question at home. One of the most important question for examination. Then question number 2 also you can try it at home. From your study material, practical question number 1 and 2 you must try it at home. From basics, if it is tested, it will be this question. Take up this.